The US stock index is opened with a 0.3% gain on average. Yields of US treasuries are also extending a climb that in turn is dragging Nasdaq futures down. Yesterday, high-tech stocks dropped another 2%. As for commodity markets, oil is trading firmly at elevated levels of $65–70 a barrel. Oil prices have been stuck in this range in response to the OPEC decision to maintain oil production quotas for a while, despite a decline in the pandemic rates and global economic recovery. The Dow Jones is expected to conquer fresh one-year highs. The bullish trend of the Dow Jones is sustained by expansion in the oil sector and high oil prices. Besides, the Dow Jones index is more resilient to headwinds than the Nasdaq and the S&P 500, which are set for a deep downward correction in the nearest months. Some analysts believe that high-tech stocks have already entered a correction phase that is confirmed by a sharp drop of the Nasdaq yesterday. The US dollar index has halted its growth at near 92.50. Analysts do not rule out its possible fall to 91.50. The index is likely to consolidate its gains in the range of 91.50 to 92.50, with the prospects for a further advance. Today, the Canadian dollar edged up to 1.2450 against its American rival. However, experts reckon that the loonie will not keep bullish momentum for long. Despite a notable advance of the Canadian dollar for 12 months, the US dollar's strength rests on solid fundamentals, so the USD CAD pair will rebound inevitably. Global investors are still speculating on the reasons behind the beyond growth in yields of US treasuries. Experts warn that growing yields of treasuries and inflation acceleration could assure the US Fed to raise interest rates sooner than later. Earlier than expected moves towards tighter monetary policy might set the stage for a new global crisis in the nearest 1 or 2 years. Importantly, most global central banks have been following ultra-loose monetary policy for 12 years in a row. In other words, the world is provided with easy money. Looking back to the financial crisis of 2008–2009, major central banks slashed interest rates to 0%, which have been put on hold at record lows since then. And that's all for today. We keep monitoring the financial market situation. Subscribe to our channel and see you tomorrow.